everyone would love to have a wonderful portfolio, right? A combination of short term and long term stocks will help an investor to accumulate wealth over a period of time. So, one of the most important thing is portfolio management. And in the short term investment and long term investment, any investment you are doing for a period less than 1 year, it can be couple of weeks, couple of months, right? Anything less than 1 year comes under short term investment. And any investment you are doing for more than 1 year, 1 year, 3 years, 5 years, and above comes under long term investment. So, in this discussion, we will discuss more about how you have to manage both short term and long term, and what are certain criteria you should follow to handle your portfolio to give a better return in your portfolio, right? So let me share my screen and let's discuss on that, right? Let's discuss on that. So first of all, in the portfolio management, right, one very important aspect is you should have a bifurcation between short term and long term, right? You should have a bifurcation between your short term and long term. And any portfolio which you create, right? Any portfolio which you create, you should have a separation. Okay, these are my short term stocks and these are my long term companies. And even, yes, it is always good to have a two demat accounts, one a main account and the another as a backup account, right? Always at any time, it's good to have a backup account wherein in one account, if you have any technical issue or any server issues related with the demat, you have an alternative. The chances are very less for a demat to have a service issue or a server issue for a longer time, but it's always, to be on a safer side, it's good to have a backup account, right? Apart from one demat account. Now, it is okay if you do not have a bifurcation between short term and long term. You can keep one set of stocks into short term, one set of stocks, your entire long term stocks, into another demat account, so that your bifurcation will be very, very clear. And as an investor, right, like your savings account, you can have any number of demat accounts, but I would highly recommend, right, one or two. Don't go for more demat accounts, right? Opening 3, 4, few people have 5 demat accounts. It confuses and it involves a lot of yearly charges as well, right? Yearly account maintenance charges and all. So one or two demat accounts is more than enough, right? So as per the rules, you can open any number of demat accounts, but restrict it to one or two. Now, in the short term stocks which you are tracking, right, follow some process, right? Something like a watch list, right? I have a list of stocks, or I have already invested into certain companies into watch list. So follow these rules. First rule, review your stocks at least weekly twice. So yes, if you have invested into like 5 or 10 companies which are for short term, right, when you have entered just for the assumption of exiting, or you assume that they acquire value in couple of weeks or couple of months, right, ensure every week twice at least you go through it. What is the strength, right? What is the price action? What is the volume action, right? You can go through it. And yes, this watch list preparation, you need not only do it in your Excel sheet. If you have a TradingView account, right, you can also prepare a watch list in TradingView. So it hardly takes not more than 5 minutes, or even if you're a beginner, not more than 10 minutes to quickly have a review of the stocks. What is the strength they are possessing, right? And yes, as I discussed, any investments less than 1 year, keep it under your short term angle, not under long term, right? Few people ask me, sir, there is a very strong company wherein I see a lot of potential, right? I've recently analyzed it. I would recommend any company which has come in your radar, right? Look in a scenario wherein if it is completely exhibiting strength, or it is continuously exhibiting strength in terms of its price movement, where the price is increasing, after observing for few quarters, it can be like 2 quarters, 3 quarters, right? Even after observing for 1 year, then move it under long term. Okay. Now, sir, what is moving from short term to long term, right? All your short term stocks, you normally look under your time frame with daily time frame, right? Daily time frame. So what do you mean by daily time frame, right? So daily time frame, we see, is there any demand or supply issues, right? Is there any short term news which is impacting the share to scale high? And on the chart, right, in trading view, when you look on a daily time frame, any indication wherein you get for exit, right, you are much prepared. And yes, in our earlier discussions, we have discussed about EMA also, exponential moving average, wherein an invested position under short term, because of any reason, if it is falling below EMA 21 or if it is reversing below EMA 21, it is an indication for you to either reduce your position as it is losing strength, or even it is okay if you slowly exit out of it also, right? Exit out of it. So yes, all your short term positions, you look under your daily time frame, you review at least twice in a week. And now let's look at the long term watch list. Certain companies or certain positions which you have invested for a period of more than 1 year or even 3 years or even 5 years and above, these stocks, review it at least once a week, right? You have a watch list of long term stocks, review at least once a week or fortnight, right? Every 15 days, you just go through it. And as these are the companies for long term, we normally look under weekly or monthly time frame, right? We normally look under weekly or monthly time frame, because understand one thing, as you reduce your time frame in trading view, there will be more noise involved in it, right? So a company which you're holding for 3 years or even 5 years or even 1 year and above, if you look under weekly price movement, any 1 or 2 days change will not give you exits. And yes, the earlier discussion when we discussed about EMA, for long term, we keep it under weekly time frame in trading view. And if weekly, if the stock is falling below your EMA 30, it is a sign of weakness for a long term company, right? Like that, for short term and long term, you have a watch list and you have a criteria for reviewing the portfolio. And if someone feels, sir, I'm a very long term investor, right? So I think I need not review, I just leave it for years together. I'll tell you one thing which may be hard to digest. Gone are the days where we forget about the portfolio and we just leave it like that, right? Now the market dynamics are very quick. So it is always good to review the portfolio and do not have that opportunity cost, right? Wherein, sir, yes, I've invested in a company, I've not reviewed for a couple of years, the stock was stagnant almost like 2 years, almost like 3 years, right? In that kind of a stagnated companies, it's better to change the sector, right? Or it is better to review it and enter into a stronger position, right? Enter into a stronger position. Now, what we will do, let us look at what are the common portfolio management mistakes which majority of the investor does, right? Which majority of the investor does. So first of all is forgetting about sold stocks, right? Yes, sir, I have been invested in a very good company and I have done my profit booking, got around 40%, 50%, some X amount of percentage, right? And whenever the stock is again exhibiting strength or it is again coming into your limelight, it's always good to re-enter, right? It's always good to re-enter. And if your position is coming out with stronger volumes, right? That is a very good entry point as well, right? That's a very good entry point. So a company in the earlier instance, X Private Limited is there. Sir, because of some reason, because of FOMO, yes, in investing, your psychology plays a very big role. Because of some reason, as the stock is moving out, right? Because of FOMO, fear of missing out, you have entered at a higher price. You did not enter early, or the price has been too extended and you have had some loss. If you have exited, after that, if it is again showing strength, and it is breaking out, if it gives an entry, again enter into the position, right? Again enter into the position. And after a proper breakout, don't be afraid to buy it back, right? Don't be afraid to buy it back. This is one major issue where majority of the investors are facing, right? I'll give you an example, right? Not a stock recommendation or not a tip, but I'll just give you a general example so that it will be easier for you to understand this discussion what we are having, right? Let me give an example of Atul Auto Limited, right? Yeah. So if you see Atul Auto, from almost around 1st September, right? It is attempting to cross 640 levels, right? 640 has been the key resistance for the stock from a very, very long period. Yeah, from a very long period. And almost in September, October, November, it has attempted to move high, right? And company wise, if you have done your analysis and if you feel it is stronger, right? And you have entered in September, but because of some reason it has again bounced back or it has reversed, and if it has triggered your exit, it's okay even if you have exited, but always keep under your watch list, right? When it is again breaking out like how it is doing now, and if it is able to successfully break out along with volumes, right, you can again enter into the position. So it's not about the stocks which you sold, you are completely forgetting about it. No, right? It's not like that. And as we move, right, as we move, let me also tell you, this is one major issue, not wanting to take a loss, right? Not wanting to take a loss. So this stock, right? I'm just giving you an example, right? Atul Auto. Sir, I have done my analysis, right? On the OEM space, original equipment manufacturing space, right? On the three-wheeler segment, I've done my analysis. I found it is good, but from my entry point, let's say you have entered at 640 levels, right? During September, it has been started falling down. It has went below 600, right? At 580 like that. Accept your loss, right? If you have entered into a position, a fresh position, that too into a short-term investment, because of any reason it is reversing from the purchase price, have a 6 or a 8% stop loss. And if it is triggering, move out and accept the loss. Again, when it is giving you a re-entry, then you can re-enter, right? Then you can re-enter, because while creating a portfolio, don't just hold on to your losses. If you're holding a loss of 7%, 8%, 10%, and you compound it, it'll be very difficult for you to get into break even, right? Losses work against you, right? Compounding works in favor of you, right? So you should always look at compounding your returns rather than compounding your losses, right? So be prepared to take a loss and do not ignore sell signals, right? Do not ignore sell signals, right? Let me give you an example. Sir, a stock wherein I'm analyzing that company, and because of some reason, it is continuously falling or it is continuously breaching its support levels, right? It's just continuously falling down, right? So that is an indication of weakness in the stock, right? Weakness in the stock. Let me give you an example, right? Let me give you an example, right? Yeah. So let me randomly take a company like Gland Pharma, right? Gland Pharma. Even if you look in weekly scale, this stock, right? Even if you look in weekly scale, this stock, from its IPO, almost from November 2020, it was very successful from almost around 1800 levels, moved to 4300 levels, very good. But at that time, whoever are already invested, right? If you're not observing the sell signals, what are the sell signals? It has started coming down. Even if you are a long-term investor, sir, I wanted to hold this stock for a longer period. Even if you apply your exponential moving average, right? Even if you apply your EMA, under 30 weeks, right? EMA under a 30 weeks period, it has given you an exit as the stock price has fallen below the EMA 30 on January, right? This you have to understand that it is a sell signal. Apart from that, even if you draw your support lines, right? Even if you see here, yes, this level of 3192, almost from May 21, it was holding in February, right? Even in March, but on May 2022, again it came down below the support level. This is another sell signal for you, right? Your EMA 30 is asking you to move out. The stock, even on a weekly scale, is falling below your key support levels, right? So respect those sell decisions, right? So any selling signals, if it is reflecting, you have to respect that. And now as we move forward, what did I tell you? A stock wherein you have exited, right? Again, once it gives you a re-entry opportunity, even if you see in the present times, right? Gland Pharma, even as of now, as many of the pharmaceutical companies or the entire pharma sector is also in an upward movement or in a trending sector, as the pharma overall index. And how do you look at the overall index? If you just select Nifty Pharma, right? CNX Pharma, you see CNX Pharma is at an all-time high, right? Or even it has crossed a 2 years breakout from almost October, right? So entire CNX Pharma is good, and even Gland Pharma, as you look here, it is trying to breach out its key resistance levels, right? So you need not forget about a company. When it gives you a re-entry position, you can observe, right? You can observe and you can focus on it, right? You can focus on it. So the key lesson is, do not forget about a sold stock. If it is triggering you, accept the loss, right? Do not have that, or do not do that mistake of not wanting to take a loss. Sir, I'm not prepared to take a loss. No, in the investment, there will be certain position. If it is acting against you, or if you have taken a wrong bet, accept it, exit, and don't ignore the sell signals, right? Don't ignore the sell signals, right? So if you do these properly, that is how you build a solid portfolio under short term and under long term, right? So portfolio management is very important for any investor to accumulate wealth in his journey of financial freedom. Okay, good.